To keep yourself updated, subscribe to IndigoLearn and click the bell icon.
Friends, now we are starting a super important adjustment, which is dividend paid adjustment. Just concentrate carefully. Almost in every problem you will see an adjustment regarding dividend paid. That much I can tell you. Please concentrate carefully to get clarity on this logic. It's very, very simple. You need to know what the game is. Dividend paid. What exactly happens with respect to this dividend? The company has completed 1 year of its operation, say from 1st April 2019 to 31st March 2020. 1 year of operations completed. The company happily earned a lot of profit, and now the company wants to declare dividend. On 30th of June 2020, the company had an annual general meeting. In that annual general meeting, the board of directors proposed that, hey, why don't we pay dividend to the shareholders at some 10%? And the shareholders voted in favor of that resolution, and the dividend actually got declared. All right. So friends, dividend will be proposed or recommended by the board of directors, and it should be declared or approved by whom? It should be declared or approved by the shareholders. Okay, fine. So here this dividend, whatever we are talking about, was actually approved by the shareholders or declared by the shareholders. Excellent. Now this dividend is what exactly is the journal entry that we have to pass for dividend? What will happen? Cash will go out once the dividend payout happens, right? So bank balance will come down. That is one thing which is clear. You can pay dividend only if you earned profits. So profit P&L will come down. Two things will happen. What will happen? What is the first one? The cash balance, cash or bank balance, that will come down. And the second thing is the profit, whatever you have, that profit also will come down. So imagine if the company earned in this period a profit of 1 crore. Entire 1 crore was paid out in the form of dividend. Then what will happen? Company, whatever it earned, paid off as dividend. So that money went back to the shareholder. Imagine something like this. The company started on the first day with 5 crores of capital. The company earned 1 crore of profit, and on 31st March, assume all that profit is in the form of cash only, and company on 30th of June paid dividend. So basically 5 crores of capital became 6 crores by the time we came to end of the year, because actually 1 crore got added because of profit. But when dividend was paid out, what happened to the profit position? Well, whatever profit we earned has now been distributed. So we earned 1 crore, distributed 1 crore. We do not have any profit per se. The capital of 5 crores, whatever we invested, that is there, but the profit from 5 crores became 5 crores minus 5 crores, 0. So when dividend is declared, profit comes down for the company which is paying dividend, and correspondingly the bank balance comes down. Very good. If the holding company has declared or paid dividend, what is the effect you are supposed to give? Friends, the question is, why should we give effect? Why should we give effect? Why am I asking this question? The reason is, if the holding company has declared dividend sometime in the past, the bank balance would have gone down, its profits would have gone down. So unless the question tells you that they have not accounted for it or something funny has happened, you will assume that dividend paid is accounted for. Friends, understand this point carefully. Unless there is some intimation in the question that dividend paid is not accounted or something like that, there is no reason to believe that it is not accounted for. Now, you may ask me, sir, where are you getting this assumption from? Because with respect to bonus, we consider that if the question is silent, maybe the company has wrongly accounted and things like that we spoke about. So how do you know whether this dividend is actually accounted or not accounted? Friends, a very simple thing. Bonus is a journal. I am talking about a journal entry. JV we call it, journal voucher. Journal voucher, when you pass, basically cash doesn't come in, cash doesn't go out. It is just an adjustment between two ledgers. Reserves went down, share capital went up. That was in the case of bonus. So there is a chance of we missing out on JVs if those events have happened during the year. But when I say bank entry, if there is a bank entry, whether or cash or bank, whatever, if amount has come in or gone out, if a business does not track that, I think it is better to shut down the business. Please understand. So, if amount is coming in or going out, if you don't have clarity on that, then what business are you doing? So, if amount is going out, then bank account will be credited. Which account will be debited? The P&L will be debited. So, it is assumed that the dividend paid entry would have already been passed. Okay, very good. Now, move to the next point. Please pay utmost attention. The financial year is from 1st April 2019 till 31st March 2020. This is the financial year. Next, we are in the next year now. 1st April 2020 to 31st March 2021. So this is 1 year and this is the next year. In this year, we earned a profit. Okay. Profit what we earned in this year is declared as dividend, not in this year, generally. Interim dividend, keep it aside. I'll come to interim dividend later. Profit whatever we earned in this year, when I talk about something like final dividend, that profit will be distributed as dividend in the next financial year. So, something like 30th of June. On 30th of June, we declared dividend and distributed that to the shareholders. Fine. So, the profit what we earned in this year got distributed to the shareholders in the next financial year. Are you clear about this point? Profit what we earned in this financial year actually was declared as dividend in the next financial year. Now, if this is what is happening, now if I am doing the consolidation of this next financial year, that is from 1st April 2020 to 31st March 2021. If we are in this year, chartered accountants concentrate, there is dividend paid. Dividend paid in the current year. Dividend paid in the current year on 30th June 2020, but it is not the dividend paid for the current year. It is paid in the current year for previous financial year. Understand carefully. It is paid in the current year for the previous financial year. So friends, final dividend, if it is paid in the current year, it will never be for current year. Final dividend that we pay in the current year, cash outflow will happen in the current year. That cash outflow which happens in the current year is not dividend for current year. It is dividend for whom? Dividend for the previous financial year. Dividend for which period? Dividend for the previous financial year. It's very, very important. You might be wondering, why is he emphasizing so much? When you actually start looking into the other adjustments regarding dividends, you'll understand why I'm emphasizing on these basics so much. Right, move on. Please trust the process. Please pay attention. Trust how we are discussing this. Concentrate properly. This is super important. Right. So, quickly recapping whatever we learned. We said final dividend of 1 year. If it is paid in current year, it is final dividend for the previous year, and dividend will be declared in the annual general meeting where members are the ones who will finalize the dividend. We spoke about this point. Right. What if it is interim dividend? Interim dividend for current year can be paid in the current period. Okay. Interim dividend for the current period can be paid in the current period. I want to talk about interim dividend not now. Let us talk about interim dividend later. Okay. So keep that conversation about interim dividends aside. If you understand the logic of final dividend, then understanding the logic of interim dividends will not be difficult for you. Okay. Right. So now move to the next point. I am the shareholder of the company and I purchase the shares of the company on 1st April 2019. Please pay attention. I purchase the shares on 1st April 2019. There is only one share in the company. Because I am framing the question, I am just writing a question like that. Okay. Now please don't say, sir, minimum 2 shares should be there. Nothing like that. Okay. So there is only one share in the company. And I am the only one who has that share in the company. Okay. Right. Very good. Now, when I purchased the share of the company, it was 10 rupees. I paid 10 rupees and purchased the share of the company. At the end of the first year, the company earned profits of 5. Listen carefully, the company earned profits of 5. Very good. Share price moved up to 15 rupees. We are on 31st March. Very good. Now, on that day, I actually sold my share, or on 1st April 2020, I sold my share to my friend, that is you. I sold the share to you. When I sold the share to you, I sold it at 15 rupees. I sold it at 15 rupees. Now, listen carefully. I bought it at 10. I sold it to you at 15. When? On 31st of March 2020 or on 1st April 2020, I sold this share to you at 15 rupees. I bought at 10, sold at 15. For me, there was a profit of 5 rupees. I have a gain of 5 rupees or profit of 5 rupees. In taxation, you may say it is capital gain, but in accounting, we simply say it is revenue profit. So, that is, I made a profit of 5 rupees. I bought it, I waited, I earned that profit of 5 rupees. So, chartered accountants, this 5 rupees of profit, whatever I made, can I say that I earned that profit of 5 rupees? Absolutely yes, because I actually bought the share, then I sold it after 1 year and made a profit of 5 rupees. So, the profit what I made is 5 rupees. That profit is called earned profit. Earned profit can go and get credited to profit and loss account. Very simple. Earned profit can be credited to profit and loss account. I can earn profit by selling goods at a profit, and that is one way of earning profit, or by maybe I made an investment, I received dividend. If I receive dividend also, it is something which I would have probably considered. Imagine, I did not sell it on 31st March. I sold it on 1st of July after the company declared dividend. Company declared dividend, say I received dividend on that day, example, I received dividend on 30th of June, and next day I sold it. That 5 rupees of dividend, whatever I would have received, that 5 rupees of dividend, what I would have received, I will call it as profit, or I will call it as income earned, and I will credit it to my profit and loss account. Think about it, friends. I earned it because I will say, hey, I purchased the shares on 1/4/2019 and I actually earned that profit of 5. I earned that profit or income of 5. So basically, friends, that if I received the dividend, that 5 rupees I would have credited to my profit and loss account. If I sold it to you, and now I am saying it is like I sold it to you on 1st of April itself. So dividend is not yet declared. I sold it to you on 1st of April itself, and I sold it to you for some 15 rupees. I am just giving 15. It could be 14, 13, whatever. Okay. So whatever is the gap between my selling price and my purchase price, that is a profit to me. That profit I can credit it to my profit and loss and say I earned it. So whatever is the profit from trading operations, that may go into my profit P&L account. Then my profit from sale of investments also can go into P&L. My earnings from investments like interest, dividend, etc., those also will go into profit and loss account. Obvious, this is all fine.